joining me today. My name is Wesley Boudreau, one of the financial advisors here at the Retirement Group. Today I'm going to give you a quick kind of a mid-quarter interest rate update and how it's affecting the ConocoPhillips pension plan lump sum calculations, especially for those of you that are looking to take that pension lump sum in second quarter versus third quarter. And a lot of you may be on pins and needles given the interest rate situation, given the drastic changes in inflationary pressure over the last few months, and then probably continuing forward. We're seeing some major shifts and major changes in the lump sum calculations. And just to kind of back up and remind everybody how it is calculated, in most of the Conoco plans, if it's not the cash balance plan, but the original Conoco or the original Phillips plan is a defined benefit plan, in which case there is a formula to determine what your single life annuity is going to be for the rest of your life. If you want to take that as a lump sum, what happens is ConocoPhillips takes a look at that payment they have to give you, look at your age and your life expectancy to determine how many more monthly payments they have to give you. Then look at interest rates to determine how much they have to give you as a lump sum calculation for you to go out there and try to essentially go recreate that payment yourself. So when interest rates are lower, we have to see them give you a higher lump sum. Think about it like a mortgage. When interest rates are lower, you can afford a bigger house or a bigger mortgage at least. So what's going to happen is as interest rates go down, we see lump sums come up, which is what we've seen over the last couple of years during the pandemic. We've seen historically low interest rates, which means historically high lump sums. Now on the flip side of that, we're starting to see interest rates go up, and they're not just going up, they're going up drastically because of the inflationary pressure we're under right now. So as those interest rates go up, we're going to start seeing those lump sums come down, and we're seeing them come down pretty quickly. We didn't see much of a decline in the first quarter versus second quarter, but as we get into the third quarter, which we don't have the numbers just yet, but we're getting close, we're going to see a pretty big shift. So the way that they do it is for the portion after 2009, they look at what's called the Pension Protection Act segment rates, which are broken up into three different segments. There's the first segment, which correlates to the first 5 years of retirement, the second segment for years 6 through 20, and the third segment for years 21 and beyond. For most of us, that middle segment, that 15-year period, is going to have the highest weighting on our retirement because it's going to be the most years in there. So let's take a look at that, and let's kind of dig in and zoom in here for you a little bit. Now, I want to remind everybody what they do is they actually take a look at the average of the fourth prior month to determine what that quarter is going to be. So if you look at the top here, the average, the Pension Protection Act segment rates for December 2021 dictate what we're going to have here in the second quarter coming up. So that first segment's 1.16, then 2.72, then 3.1. So if we do see below there that 2.55, we did have a little bit of a jump in interest rates from that second segment, from the first quarter to the second quarter. However, I want to draw your attention lower to the big highlighted area of the February rates. Now, keep in mind, February has no bearing whatsoever on the actual interest rates used for the third quarter. We have to wait until we get to March. However, it gives us a good indicator. If you look at this, we're actually in that second segment already up to 3.35%. So already we're up, about 60 basis points higher. So that 60 basis points change means we're probably going to see about a 6% change in your lump sum calculation from second quarter to third quarter, everything else held equal. Now, there are other items like age penalties and things like that if you take it early. So give us a call, we can go over that with you. But that 6% change, let's say you ran your numbers, you had a $500,000 pension lump sum right now, that could be going down by $30,000. If you had $1 million lump sum, it could be going down by $60,000. If you have a higher one, the drop could be even higher. So it's really important for anybody looking at retirement in the next year or two or even 3 to give us a call to run these numbers so you have an idea when we get closer to late April and we know what those March rates will be. You have an idea of where you're going to be if you need to pull that trigger early or not. Because a lot of times if we have a sizable change like this and you stay on, you could be effectively working for free. Again, if you have $1 million lump sum, you're losing 60 grand in 1 quarter. Most of us don't make that in 1 quarter. So you could be working for free. So it's just it's good to at least run the numbers and see how that correlates. Now, again, we won't know until we get March rates, but if the 10-year Treasury is any indicator, it's already gone up by over 60 basis points so far in March through the third week. It started at 1.72. It's already up to 2.38 as of this recording. Now, if we see that happen, then we could actually see those interest rates go up, maybe instead of 3.35%, maybe 3.5% or so. So you might see a 70 to 80 basis point climb from the second quarter to the third quarter, which could be drastic and obviously the highest we've ever seen in the history of the segment rates. So again, any questions on this, just give us a call. We'll be happy to run the numbers for you. The best way to look at this is by running a cash flow analysis to see how it affects you not just now, but the next 10, 20, 30 years as well. But again, give us a call at 1-800-900-5867. We'll be more than happy to help you out with this and answer any questions you have. You can also reach us at info@theretirementgroup.com. If you're tech savvy, just go ahead and hold your phone up to the screen. There's a couple QR codes there. If you'd like to schedule an appointment with myself or one of the other advisors, you can do that there. Or you can also make sure you follow us on LinkedIn so you get updated information on the ConocoPhillips plan changes or interest rates and how they're affecting you going forward, or any updated webinars we have coming out as well. At the end of the day, just want to remind everybody, again, we're not affiliated with, nor are we employed by ConocoPhillips. However, we've been working with employees and retirees quite extensively for many years, so we have a deep understanding of not just this, the pension plan, but also the 401k plan, medical retiree benefits. Pretty much anything you think of, you have questions about, just give us a call at 1-800-900-5867. We'll be happy to help you out. I want to thank everybody for taking some time, and I hope you have a great day.